All right, so I am fresh off of the Yellow Ribbon weekend. Had a great time. It was exhausting. I did about 7 classes, but I'm glad I got to meet a lot of you. Glad I got to pass on what I know, and I wish you the best for those who are deploying and their families. And if I could do anything for you, or anything for you, the people that have post deployment, please reach out to me. That's all I do all day. There's my plug. About every 3 months or 4 months or somewhere around there, I get asked, if you don't mind me asking, how does your portfolio perform and what do you invest in? That's a fair question, because I mean, if I can't manage my own portfolio, how can I manage your portfolio? So I tried to do this in a way that I didn't violate any YouTube standards. I didn't violate any PII for the reserve. So I took clips and put them on a Word document from all the reports that I got from Schwab. I did a deep dive into my portfolio. I don't typically do that with my portfolio. I don't know why. I just do my trades, and I do a dividend portfolio. So the how you're performing really is in the back seat of what you're actually earning on a monthly income. So I really don't dive into it, especially since I don't have clients and I'm not constantly looking at portfolios. So I did do a deep dive into mine, however, and so I'm going to go over that today. So small cap or large caps here, I'm 29%, which is extremely low. This is the S&P 500. So I'm really low in large caps. Small caps, which are typically aggressive, I'm 28%. So I have large caps and small caps. I believe small cap has some mid caps in there as well. International, very low, 1.7%, and I think that's in some of the mutual funds or some of the ETFs I invest in. I don't actively seek out international. Their standards for reporting are a little different. They don't have a lot of the accounting standards that we have, especially if you're dealing with China. There could be some manipulation there. I'm pretty conservative when it comes to actually investing. Not as conservative as many people that aren't in the investing world, but as a financial advisor and as a financial professional, I'm extremely conservative compared to other financial professionals. My fixed income, look at that, it's almost 24%. Cash, 12%. So those two together is 34% or 36%, somewhere in there. My uncategorized, that's my options. I got about 4-5% in options. They're conservative options, usually covered calls or cash secured puts. I believe I have some credit spreads in there as well. But yeah, that's 36% in fixed income and cash, and then about 65% in stocks, which is pretty conservative. That's a 60-40 portfolio. That would be a little over moderate. Moderate is a 60-40 portfolio. So not a lot of risk there. I was actually surprised myself, because I'll see a stock and I say, that's a quality stock, I'm going to buy that stock. Or that's a quality ETF, I'm going to invest in that ETF. I don't look at the big picture sometimes, just because it's like second nature. So this is how long I've been with Schwab. They were bought by TD Ameritrade, or no, TD Ameritrade was bought by Schwab around this time, May-ish, and so I only have this. It only goes back about a year and a half or 15 months, which is a good analyzing period. I mean, you could go, but I usually look at sometimes 3 years, 10 years is hard to get, especially on your own portfolio. You could do it on mutual funds, but 1 year is pretty good, or 15 months or 2 years. 6 months, really don't know a lot after 6 months in a portfolio. So I got a return of 27%, annualized 19%. So the 27 was over the 15 months, And then if I were to break that down per year, it'd be 19% per year, which is under what the S&P 500 did. So if you look right here, mine is the blue, the S&P 500 is the orange. So the Russell 2000 is small caps, so I could compare it to small caps. Small caps have underperformed over this period, so it would have probably looked better than it should have. The S&P 500, I only have about 30% in the S&P 500, so this is not the best comparison because this is all large caps. Dow Jones Industrial Average, nobody's compares to that anymore. It's just 30 stocks. Nasdaq is a pretty good one as well, very close to the Russell. Um, Let me look down here. So yeah, I did underperform the S&P 500 by a little bit over that time frame. But here's the super important part. This is the part where people get in trouble. Here's the return on the y-axis. Here is the risk on the um, on the x-axis. So you can see mine is this one right here, and so risk or the return is the highest out of these are portfolios, asset allocation portfolios. This is I believe this is aggressive, moderate, and so on. I have the highest return for asset allocation and lower risk than the top two tiers. And in chart form, here's in chart form, this is the standard deviation, is how they measure risk. It's 8.24, so that would be right here. Slightly more aggressive than moderate. Moderate's is 60-40, remember? So that's what they're going by, 60-40. And then the return outperforms the aggressive, the moderate, and the moderate aggressive. And my risk is over here at the 8.24. So as I said, I'm pretty conservative as a financial person, but I this portfolio seems to be outperforming. Wanted to show you one more thing, benchmark that is probably a little better. This is one of the top asset allocations according to Schwab. It's the Schwab 2065 allocation versus the S&P 500, and you can see it tracks the S&P 500 very closely. Good performance here. I'm a little concerned about this down here because it took all of these losses and took most of these losses. Took more losses here. I mean, these are taking losses, but you know what I'm saying. It underperformed hugely right here. This is a huge gap. You don't want to see that gap. And then if you look at mine compared to the S&P 500, if you look at these side by side, mine's much more of a smoother line. Right here, I have the same. I have gaps right here, but they're much looser gaps. This gap is concerning right here, but if you look here, how jagged this is, mine's a lot more smoother. And then here, I did not take anywhere near the losses that the S&P 500 did. And then over this bouncing point right here, it outperformed my account through July-ish of 2025 because we've been on a tear. But I mean, I'm right there. There is a bit of a gap there, so I am right there. But I can tell you right now that the 2065 fund from Schwab is much more aggressive than mine. It's mostly S&P 500 stocks, Apple, Tesla, stuff like that. But yeah, I just wanted to show you my performance and what my investments have done. Maybe I'll do this was just an impromptu because somebody asked me, but maybe I'll do a video about what I actually invest in. The danger with doing one that I actually invest in is people will try and mimic that portfolio, and you probably don't watch your portfolio as quickly or as closely as I do. So what ends up happening is your portfolio gets out of whack. I'll change out positions, and then you won't change out positions, and then all of a sudden, my a year from now, I may have a totally different portfolio, and you're still in my old portfolio from 2 years ago. So when you're tracking portfolios, especially on YouTube, they have to be very consistent with their reporting, and people have to follow them closely if that's what they're going to do. And I don't think that's wise for me to do that, just because everybody's not the same. And I preach personalized advice, and if everybody's doing what I'm doing, that is not personalized at all. All right, so all right, I guess that's enough for the video.